Hello folks, it's a fine day here on planet Earth. This is another weekly edition of Satori Trader's Precious Metals News. This is edition number 18. And on the cover this week we have Dolly Varden Silver, a pretty interesting mining company. And then we also have, over there on the right-hand side, that's the general manager of Novo's Nullagine project there in Australia. And he is holding the company's first 400-ounce gold bar. And so that is, if I was holding $700,000 worth of gold in my hands, I would be smiling as well. And that's what's on the cover this week. And let me just point out, folks, in this week's edition of the newsletter, in the print edition, the PDF edition, I have not talked about the charts at all. So here in the video, I'm going to talk about the charts. If you want to know my thoughts, my comments on these individual charts, look in the PDF because that's where you'll find them. I'm intentionally trying not to duplicate information because I don't want to waste your time. Let's jump right into the charts. With that said, here we see Dolly Varden. What it looks like to me is that, the stock has pulled back to support. So we've got support in this horizontal support resistance level. And so what we have is price pulling back to this horizontal support resistance level. Support here, resistance here. And then, more importantly, on Friday, we got this nice surge on some good volume, price surging higher off of that support level. And so that's nice action there. This is, for me, this makes it pretty simple. What is the value proposition in Dolly Varden? Well, this right here, the red, and this red over here, that's Dolly Varden's land package. Well, who's this guy in the blue? Well, that's Hecla Mining. Now, if we were going to talk about a likely buyout, who do you think might be interested in buying Dolly Varden? Golly, seems like Hecla. Seems like Hecla would be a likely candidate. And so anyway, that is a big part of the value proposition with Dolly Varden. And of course, on top of that, they are reviving a historic mining district. There are at least 2 historic mines on this land package, 7 kilometers of underground works that were rehabilitated in 2017. On this land package, there is a hydroelectric plant that was used to power the historic mill at Dolly Varden. This is a very interesting mining company, and at 20 cents a share, this is OTC. This is the over-the-counter here in the U.S. If you are a U.S. investor and only have access to this stock via the over-the-counter markets, it's currently 55 cents. I would suggest this is not a bad place to invest your money. Our next chart is Novo Resources. And of course, in the past week, Novo poured their first 400-ounce gold bar. And that is very exciting news. Obviously, if we look at their chart, we can see that investors anticipated a price rise or a re-rating of Novo Resources when they became a producing miner. Now that they are a producing miner, we have yet to establish what the throughput or the output of the Nullagine mill will be. Dr. Quentin Henney believes that it will be 2+ ounces per ton of ore fed to the mill. So they're going to get 2 or more ounces of gold for every ounce they feed into the mill. And of course, investors are waiting to know, potentially waiting to know what that number is before they invest their hard-earned money into this company. This is Rob Humphreys. He is the general manager of Novo Resources there at the Nullagine project. And I just love, that is a human being lit up from within. I just love that picture. And of course, you know, if I was holding $700,000 worth of gold in my hands, I bet I'd be smiling like that as well. This is NV Gold Corp. I was interacting with a subscriber on the YouTube channel, and I mentioned Bob Moriarty's idea of lottery tickets. And those lottery tickets, that idea, it's the stocks that are cheap, less than a quarter a share. You know, these are inexpensive stocks. And in the current secular gold and silver bull market, those cheap stocks are likely to fly along with all the other mining stocks. And so it's, as an investment strategy, the idea is that you buy these super cheap stocks and hope, as you do with a lottery ticket, that they go dramatically higher. Now, we can use some discretion if we want to employ that investment strategy. We can look for the lottery tickets that actually have real assets. And I would suggest that NV Gold is one of those companies. So not only are they a lottery ticket, they have real assets, they have solid management in place, and more importantly, in my mind, they have solid technical advisory services with Dr. Quentin Henney. 20 cents a share, I expect this to be a good investment, and I have been I've added to my position in NV Gold recently. Here is just a brief overview of the value proposition in NV Gold. It's a safe jurisdiction. They have 14 projects in Nevada. And Nevada is mining friendly. It's a safe jurisdiction. It's considered a tier 1 jurisdiction. It's a safe place to invest from a precious metals mining perspective. They've got excellent technical expertise. They've got Dr. Quentin Henney on board. He's been on board for a long time. He's newly on board with Crescat Capital. He acts as the technical advisor to Crescat Capital, and he's been technical advisor to NV Gold for 10 years now. Anyway, a lot going on with NV Gold. Let's keep rolling. Gold, it looks to me, if you asked me what's going on in this chart, I'd say that it looks like a double bottom. So these two price candles on Thursday and Friday, that looks like bottoming action to me. And let's expand this chart so we can talk about this action. So on Thursday, clearly that's a doji candlestick, and the long upper tail is less than bullish. Let me put it that way. You might even call that, you know, it's not really a doji, a gravestone doji, which is very bearish, but it's not far from being that bearish candlestick. On the other hand, when we look at Friday's candlestick, this candle here, we have this bullish lower tail. And let's talk about these tails in general. When we see a long tail on a candle like that, that's a sign that buyers and sellers were doing battle with one another. There was a great deal of energy expended in the marketplace for these candles to show these tails like this. How I would interpret these two candlesticks is that on Thursday and Friday, sellers and buyers did battle, and the buyers kicked ass. They showed the sellers who the boss is and took price higher. Now, you know, famous last words, I may have to eat those words next week. We'll see. So this is the chart of silver, and, you know, is similar to gold here on Friday. That is just super bullish in my mind. Sellers tried to take the price of silver down to $26, and buyers came in and they just thoroughly kicked ass on the sellers. And of course, in my cynical perspective of the markets these days, the sellers in this case, they're the sellers of paper silver. And so they tried to take the price of silver down to probably below was their intention, $26 an ounce. And buyers came in and said, yeah, no, that's not the realistic price of silver. We're taking it back up here. And so anyway, sellers got their asses kicked on Friday. We're back to prices gathering energy below this obvious resistance level before it breaks higher. As to the real price of silver, I've always thought of eBay as my quick go-to test for what is the real cost of silver today. And in my mind, that means what does it cost me today for a real ounce of physical silver that I can hold in my hand. And I want to hold it pretty quickly, not out in May. You know, I'm not really interested in metal that I'm going to pay for today, but I don't get to hold it in my hand until May. In my mind, that's BS, and I'm not interested in participating. And so anyway, eBay has always been my go-to source as a data point for the real price of silver. And so yesterday I went and I did that, and I looked for, first of all, what's the cost of junk silver? And the reason I looked for junk silver first is because that's my recommended first investment in physical silver. If someone asked me, hey, what do I buy first in physical silver? It's junk silver. And so I was surprised to find very deceptive marketing here in silver, junk silver on eBay. And this is, I'm not picking on this particular seller. There are numerous sellers doing the same thing. Notice that they're saying 1 standard ounce of 90% silver junk coins. Implication is that you're getting the implication is that you're getting an ounce of silver, a standard ounce of silver by purchasing this product at $30.49. Well, with a little bit of knowledge, we know that 1 standard ounce of 90% silver junk coins it's not an ounce of silver by any means. It is not an ounce of silver. And so what we have to do is to dig a little bit deeper here. What we find is that we have $1.15 face value of junk silver coins, and at 0.715 ounces of silver per $1 of face value, we find that the real cost of silver here is about $33 an ounce. And so a little bit deceptive marketing here. Could point at numerous examples of eBay sellers doing the same thing, exploiting the fact that an ounce of junk coins is not the same thing as an ounce of silver. After seeing that, I went and looked at, okay, you know, if I were serious about investing $5,000 of my hard-earned money into physical silver right now, where would I be comfortable investing it? Would it be on an eBay seller, or would I want to deal with a known dealer like APMEX? I think they're the second largest dealer in the continental United States, and that's just from memory. I could be wrong on that. Ideally, I like to deal face-to-face with my local coin dealer, but you know, not everybody has that option. And so anyway, given APMEX they claim to have this metal in stock, ready for delivery, and at this price for a roll of dimes, so this is a roll of 90% junk silver dimes, APMEX is going to sell it to you for $134. It's about $37.54 an ounce, I believe. And so I would submit that the real price of physical silver, if we're talking about junk silver today, it's what APMEX is charging for it. It's $134 for 3.575 ounces of junk silver coin. And personally, this is a nice way to invest in physical silver. You get a roll of coins that you can easily tuck away in the sock drawer, wherever it is you want to tuck away your physical silver. That's 3.5 ounces, almost 3.6 ounces of physical silver in a nice, neat roll of coins. So at $134, I'd suggest that's a nice way to buy physical silver. If you are interested in 1 ounce silver rounds, they are available on APMEX for $33.44 an ounce, and the price goes down from there based on quantity. So this is GDXJ, the junior mining ETF. We had drawn this bullish Andrews pitchfork last week, and obviously price dropped below that fork. Oh, and let me point out, this is the weekly time frame we're looking at. So price dropped below that pitchfork last week. What we do when that happens, or my first line of defense, or my next step when action like that happens in a vehicle, is to go to the modified shift version of the fork. And that's what we see here. And basically it's just suggesting that we have a sideways range in the mining stock ETF as price tries to gather enough energy to push above this resistance level at the top of this downtrending price channel. So that's where we're at in GDXJ. SIL continues to be more bullish in the mining stocks. It appears that we've had another test of the 200-day moving average. On Friday, we've got a somewhat bullish, little bit bullish candle pushing higher off of that support level. Obvious support from the 200-day moving average, support on the lower median line of this Andrews pitchfork as well. SIL, and SIL, I suspect, is reflecting the underlying strength in silver. It is continuing to stay above the 200-day moving average. And so all of that is bullish action in SIL. The dollar just not doesn't seem to be able to muster a strong rally here. We got another attempt last week, and the dollar pushed up into this resistance zone. But then Thursday and Friday obviously dropped back off for another test of the 50-day moving average. No indication that the dollar wants to head higher, although we do have this test of support along the median line of this shift pitchfork, and the fact that price or the dollar closed above or right at the 50-day moving average. Interest rates in the 10-year Treasury note, we've been talking about this target at 1.5% for a couple of weeks now, and obviously we've got a high energy price movement headed in that direction. And again, it was just that target at 1.5% remains, and nothing to indicate that it's not going to be hit. In the daily chart, we just see that high energy movement in greater detail or finer granularity. On Monday last week, we got our first runaway gap. And then on Tuesday, not only a runaway gap, but a gap over resistance and into another resistance level with price closing at its high, which of course is a bullish factor. Then on Wednesday and Thursday, we got this minor pullback, test of the breakout level and support, and then a subsequent push higher on Friday. So anyway, this chart is telling us that interest rates are headed higher. Certainly the next target at 1.37% is likely to be hit in this coming week. The equities, what can we say here, folks? Looks like $120 billion a month being pumped into the equity markets isn't enough. Maybe we need to double that amount to push those markets higher. Same story in the Dow. Prices pushing up against resistance, not able to push higher. Nasdaq, it was the most bullish of the equity markets. It had actually managed to push above that resistance level. Looked like it was establishing that level as support, but then at the end of last week, we got the drop back into this price channel, the mini price channel, and back below the upper median line extension of this modified shift pitchfork. So the equity market's not looking very bullish in last week's action. And if we're honest with one another, we have to acknowledge that the only thing keeping the equity markets supported at this point is 0% interest rates for the next couple of years and $120 billion a month. Regardless of how you want to talk about it, that money is supporting the equity markets and pushing them higher. In Brent, I was laughing at myself last week. Living here in San Diego, it's exaggerating to say that it's 70 degrees year-round. That's not really the truth. It's nearly, it's pretty close to the truth, but not entirely the truth. But anyway, we forget that it gets cold in other parts of the world and forget to attribute the rising cost of energy to cold weather. And obviously we've had some extreme cold weather in the last couple of weeks, and so some part of that rise in energy prices is due to cold weather. Hopefully this peak in prices at $65 a barrel for Brent crude marks the end of the cold weather, and we'll be back to some more back to the temperate climate that we get to enjoy here in Southern California. That's what I'm wishing for everybody today. The last thing that I'd like to talk about today is the fact that two of the silver ETFs, so now both SLV and SIVR, the Aberdeen Silver Trust, have changed their prospectus filings with the SEC in reaction to the shortage of physical silver on the markets currently. Basically, these two ETFs are saying there may be occurrences where we are unable to obtain the physical silver that would normally be required as backing for our ETFs. And so that's an important change in the past week. Two of the major silver ETFs have changed their prospectus to accommodate or allow the ETF or trust to hold less physical silver than they would normally be required to hold. That's an interesting change. Let's flip to the back of what's in the PDF version of the newsletter this week. And again, I just want to point out, I intentionally try not to duplicate the information that I present in the video and the PDF version of the newsletter. I try to make them two different sources of information, and I suggest that it is worthwhile to investors to sign up for the PDF version of the newsletter, skim through it, see if there is anything of interest to you for the given week. That's just a suggestion. So anyway, in this week, we've got some new resources. These are the 3 stocks that we highlighted this week: Dolly, Varden, Novo, and NV Gold. Check them out. I'm bullish on these stocks. Obviously, I'm biased. I feel like I've done my due diligence. I hold these stocks in my portfolio at this point in time and suggest that other investors might consider doing likewise. We have the resources from prior weeks, and then again, we presented this information last week. Bob Moriarty, he's got these 2 books on investing. If you're interested in the mining stocks, invest $25 of your money in those 2 books. I mean, if you're not willing to invest $25 to read those 2 books, Bob Moriarty is the real deal when it comes to mining stocks. Read those 2 books. You'll be glad you did. It's a $25 investment. My book, it's now available. This for mining stocks, not so much. This is for technical analysts. If you're geeky about doing technical analysis on stocks or whatever your investment vehicle of choice is, I would suggest that you ought to learn about Andrew's pitchfork. Casual investor, stock speculator, you don't really need to know about Andrew's pitchforks. That's all I got for you this week, folks. As always, have a fantastic week going forward. I truly hope that I have provided some value.